Good morning, everybody. How are we doing today? My name is Jason Krutzky. It is a great pleasure to be with you all this morning. Why are we here today? Well, we are here for the pre-market pulse, and we do this every couple of days, Tuesdays and Thursdays right now. We may expand that perhaps. And this is your time to ask me questions about the TrendSpider platform. Maybe you're relatively new. Maybe you're a relatively new subscriber. Maybe you've been with us for a little while, but you haven't really dug in. Whatever the reality may be there, we want to make sure that you know exactly what you're doing in the platform, that you have a good understanding of how to utilize all of the tools. And so I am here to hang out with you guys and watch the markets, answer any TrendSpider related questions that you might have. And also, of course, we've got the GDP revision number this morning, and we've got the initial or the jobless claims number this morning. Now, on the GDP side, I think that it's not that big of a deal. It seems like, and I just learned this yesterday, GDP is revised multiple times. We got the initial GDP number last month. We're getting the second revision this month, and then there's actually a third revision a month from now. This revision is forecast to be the exact same as the initial number, so it seems maybe this is not that big of a deal. On the jobless claims side, last week we had 191,000. This week they're projecting 195,000. So they're projecting a small increase in the jobless claims number. We know that generally speaking, this jobless claims number, it's one of those bad news is good news sorts of things. So if the jobless claims number comes in hot, all the more reason potentially for them to consider cutting rates or stopping the rate hikes because the effect that they're trying to have is working. So it'll be interesting to see how the market reacts this morning. We've got that data going live in about 28 minutes at 1:30. In between now and then, I'm here for you. So there are a handful of you guys here. Thank you so much for being here. Good morning. Thank you for tuning in. Let's take a second real quick to introduce ourselves. You know, what's your name? Where are you tuning in from? How are you doing this morning? I'd love to know more about you. I wish that I could see everybody that was tuned in so I could just address you all personally. But in order to see you guys, you have to chat at me. You have to write something in the chat. So hit me up in the chat. Let me know how you're doing this morning. Let me know your name and let me know why you're tuning in. I know that we sent out an email to some of you guys last night. In that email, you were given a link to a really cool scanner that we made. I would love to go over that scanner and kind of how it works with you guys. If you are here because of that, you know, I'm specifically curious to know how many of you are here because you received that email yesterday, kind of like testing some stuff to see how, you know, to see what gets you guys joining up and being here in the morning. I know it's kind of early. If you're like me, you're in mountain time. It is 6 in the morning, so it is bright and early. If you're on the West Coast, it's 5 right now. So you East Coasters are lucky. You New Europeans are even luckier because, darn it, it's midday for y'all, huh? Sunil, you're from Sweden? Nice. Welcome. I've never seen you here before, so Sunil, I thank you for being here. Sweden's a beautiful country. I've had the good fortune of getting to go there and be there for a little bit, so that's awesome. Jesse, what's up? Jesse Kendrick, how's it going? Listening on your way to work. Nice play on Neo. Cool. Kalo, tuning in from Norway. Awesome. Right on. Looking to improve your trading and taking in as much as possible. Well, if you have any questions about anything, do feel free to ask. Anything specific related to the TrendSpider platform. Ahmed, how's it going? From Doha. Super cool. Looking forward to use this new scanner. Awesome. So, okay, so you did receive it, Ahmed. That's cool. Did anybody else get the email? Was anybody else driven here by that email? I'm just very curious to know. And we'll take some time and look at it. So last night we sent out this email. It looked a bit like this: jobless claims, GDP numbers, what to know. So Nil, you got it too. Nice. Right on. Cool. So down at the bottom, add the scanner to your charts. Super easy to do. One of Bala from New York. So I do not do this live session every day. I'm live on Tuesdays and Thursdays pre-market, usually at 9 a.m. Eastern time pre-market. We went live a little earlier today because we wanted to watch the reaction to the jobless claims numbers. Sometimes it could be a strong reaction, sometimes it's muted, but whenever there's a fundamental data point coming out, I like to be live. So just on like a standard basis, we have Tuesdays and Thursdays at 9 a.m. Eastern time for about an hour, or I'll stay here as long as I need to answer all the questions that come in. But we are considering expanding the live offerings. I might start going live a little bit more often, or at maybe multiple times throughout the day. I'm not quite sure. Trying to figure out what helps you guys. That's kind of what it's all about. We want to make sure that you guys get trained up and feel comfortable on the platform. So whatever makes the most sense for y'all time wise to jump on and ask questions. I just want to make myself a little bit more available if that is something that our users want. So I'm talking with the team right now and kind of trying to figure it out. I've asked in communities here on YouTube. I don't know if any of you guys are using the YouTube communities feature, but it's kind of like I don't know, it's kind of like Twitter. You can post stuff. And so I've asked maybe what the best time is, and we may even send out an email to you guys soon just asking what times are best for y'all, if we can kind of pinpoint a couple of different times throughout the day or maybe a couple of specific days a week. I'm not really sure. We were just kind of winging it on when to go live, but definitely down to be live more often with y'all if that's something that you guys want and feel like you need. So what's up, TH? No problem at all. Happy to be here. Trader Isaac. Awesome. Glad you got that too. Henry B. This time is perfect for Henry. Cool. That's good to know. Yeah, I mean, pre-market's a great time to kind of like catch up on what's going on the charts. Of course, you're probably doing your morning work, looking through everything that you're considering trading. So that's why it makes sense for me to be here. And there's usually quite a bit of action first thing in the morning. So I like to be live for it. But again, like I said, happy to go live at other times too, if that is something that other people want. So let's jump into this real quick. So one really nice feature of the platform is that you can share scripts. In this case, we're sharing a scan. So in order to add the scan to your chart, if you haven't, literally just click this button here. You're going to come to this page. You're going to click on where it says login and import. And I'm already subscribed to this thing, so it says that I can't. But if you are not yet subscribed, it will ask you to subscribe, and then it'll be live in your platform. So we jump over to the platform. We go to the market scanner. And then over here in the top corner of the market scanner, we have our little search bar. And so we're just going to search RSI divergence. And, I got a number of these. But here's the one that we sent you, RSI divergence by TrendSpider. And it loads up automatically into your scanner. The reason why I wanted to share this with you guys today was simply because of what we were seeing kind of towards the end of the week last week on all of the major indices. I don't know if anybody reads my weekly blog that I put out on Fridays, but if you don't read that yet, the thing that we highlighted was the divergences, the RSI divergences that we saw going on in the SPY, the Qs, and the IWM. And they were all different, right? On the SPY here, this would be a good example of, let me just remove this for a second. A good example of a hidden bullish divergence, right? You've got higher lows on price. You've got lower lows on RSI. On the SPY there, if you jump to the Qs, we see the opposite. We see some bearish divergence. We see new highs being made from February to March, and you've got lower highs on RSI. It looks like they're kind of trying to break out of that right now here with the most recent price action. So QQQ may be negating a little bit its negative divergence. We would expect this negative divergence to resolve with a move lower. It doesn't mean it has to. It's just kind of the expectation. If we go to the IWM, we see the opposite of the Qs, and it's doing what we expected, right? It's got a positive RSI divergence. You've got RSI increasing while price is making lower lows, and you anticipate that that's suggesting a little bit of strength underneath the hood of those lower lows, and price bounces off of them and continues higher. So it's kind of what we expected with IWM, kind of what we expected with the SPY. The Qs is kind of the curveball here in that it's continuing to push higher as well despite this negative divergence. Now, keeping that in mind, this is an idea that is very easy to look for in real time. The specifics of how you find it can get quite unique. However, we wanted to give you guys an example of how to look for it. And then using this example, you can then take this and tool around with it, make it more unique to what you're looking for. So the first thing to keep in mind is that we are looking at daily time frame conditions on those indices. In this scan, we went with a 15-minute time frame for the conditions occurring. So if you want to change anything about that, if the 15-minute is too quick for you, maybe you're not a day trader, maybe you're a more long-term, maybe you're a swing trader, what have you, you can always come in here and change any of the time frames by just clicking on the time frame box. You can also go to script actions and set all time frames to, and then change all of them to a single time frame if you want. I'm going to leave it on the 15 just while I'm explaining this, but just know that you can take this and you can make your own copy up here where it says make your own copy. So in order to make kind of official edits to this, you have to make your own copy. So do keep that in mind. So the next thing I wanted to kind of spend some time with was just talking through all the conditions. I know that there's a lot here and it looks like there's a lot going on, but realistically, it's very simple. So the first thing about this, the first thing about this is we say bullish and bearish, right? In the title, we say bullish, bearish. How can something be bullish and bearish? Well, you can look for the same setups, but the opposite versions of the same setups, and that's what this is doing. So in each one of these condition groups, you have a group here and you have a group here. You have a set of conditions within each group. And one set of conditions is the bullish RSI divergence, where you're making higher lows in RSI and lower lows in price. And then you have the bearish divergence, where you're making higher highs in price, lower highs in RSI. Yeah. And each of these condition groups is listed under the main definer here of any of the following. So by choosing any of the following here, you have it's saying that this condition group is true or this condition group is true. So when you run this scan, you're going to have some setups that are bullish divergence, some setups that are bearish. If you like to, if you prefer to trade one or the other, then when you make your own copy, you can just remove one of these condition groups, right? So you could have a specifically bullish or a specifically bearish, but we wanted to give you both because we wanted to show you how to do both. So let's talk through these conditions here. So in the first condition, and if you guys need help, like understanding how to script these things, I know this is pre-scripted for you, so that kind of loses the opportunity to individually script all of these conditions out. We can do that for sure afterwards. I'm happy to walk through any of those things with you. But so the first condition, it says RSI. This last here is defining the candle. It's essentially just defining the current candle. So it's saying that the RSI, the current candle, is greater than the RSI 5 candles ago. So RSI is increasing, right? From the current candle to 5 candles ago. The next condition says the RSI 5 candles ago is greater than the RSI 10 candles ago. So now we've defined 3 candles, RSI readings, and we're just saying that they're increasing over time. So RSI 10 candles ago is lower than it was 5 candles ago. 5 candles ago is lower than it is now. So RSI increasing. Now we look at those lows. Now we're saying the opposite thing for the lows. We want the lows to be making new lows, right? So our low, price low of the current candle is less than price low 5 candles ago, right? And same for The second condition, price low 5 candles ago, is less than price low 10 candles ago. So as RSI is slowly stepping up, the price is making new lows. That's your divergence, right? So that's your bullish divergence. Now, these last two conditions, these are just essentially filtering conditions. One thing that I like to say, if you guys know me at all, if you've ever been on any of these shows and we've scripted something together, I always say define your minimums. Define some minimum conditions that will make your strategy or that you require in order to even consider getting into a trade. Maybe you like to trade these RSI divergences, but you only want to trade them on specific names or names that are meeting very general criteria. So one thing that I have defined here is that the closing price of the current candle is at least $5. It's greater than $5. So that's removing all stocks that are trading below $5. It's just a way of kind of removing penny stocks. This last condition is a volume condition. So we're saying that the average volume over the past 20 candles, so it's volume moving average, and it's using a 20 SMA. So the average volume, average daily volume, is greater than a constant value of 500,000. So again, we're just trying to remove names from this list. We're trying to remove low volume names. We're trying to remove penny-ish stocks. And you could get as specific as you want to with this. If you want to make it $20 and $1 million, if you want to make it $50 and $10 million, do whatever you want. There are no rules here. We just wanted to define some very, very basic stuff and then let you go wild on how specific you get with it. So this is your bullish divergence, and hopefully that makes sense. If there are any questions about that, just let me know. Happy to answer them. But hopefully that makes sense. On the bottom here, this is your bearish divergence. So it's set up the opposite way. RSI of the current candle is less than RSI 5 candles ago. RSI 5 candles ago is less than RSI 10 candles ago. So RSI is decreasing. Price high of the current candle is greater than price high 5 candles ago. Price high 5 candles ago greater than price high 10 candles ago. Right? Very simple, and just the complete opposite of what we were looking for in that first condition group. Same deal on these last two conditions. Price is above $5. Volume on average is greater than 500,000 shares traded per day. And that's really it, y'all. That is the very, very broad strokes of RSI divergence. Now, you could take this and go, again, you could go wild on it. It leaves some things to be discovered, right? It does require very specific conditions to be met. We're referring to very specific candles. We're referring to the current candle and 5 candles ago and 10 candles ago. And one could argue maybe that these are arbitrary numbers. And to some degree, they kind of are. This number could be 10. This number could be 15, right? Or any series. I think, again, the point here is to get y'all's creative juices flowing and get you thinking about how you define these instances, how you define divergence. On the daily charts that we just looked at, the divergence is spread out between quite some daily candles. So if you were to switch all this to the daily time frame, the SPY and the Qs and the IWM may not be meeting this criteria, just specifically because your high that you're measuring was on February 2nd and you're comparing it to the high of March 22nd. So you've got a good, 20 something sessions in between those two. Actually, I guess more like 40 sessions between February 2nd and March 22nd. 30, I don't know exactly, 30 to 40 sessions, right? So 30 to 40 candles in between. So these values don't quite line up with what we're seeing on the individual indices right now. And that's okay. We're not trying to make it perfect. We're also not trying to necessarily curve fit. We're just trying to give you a very basic example. So you've got those two sets of conditions. You can choose where you want it to scan through. It's going to automatically scan through the S&P 500 list, but that is not the biggest list that we offer on the platform. So if you click this, it's going to open up all of the scan through lists that you can choose from. Generally speaking, When I just want to see the most names, I want to have access to the biggest list of names. I'm going to either use the NASDAQ NMS Composite. So we can type in NMS in the search bar. It's going to bring up the NASDAQ NMS Composite. This is the largest single list that you can scan through on the platform. It's got about 3,600 symbols. I'm also going to use the NYSE Composite. This one is the second biggest list, 1,911 symbols. We've also got the Russell 2000, 1,911 symbols. Those are going to be the three biggest lists on the platform. When it comes to scanning, generally speaking, I would be of the mindset that I would want to, that less is more. The less results that I get, kind of the better, because the whole point of scanning for me is to remove the noise of having to filter through a bunch of charts, right? I want to create scans that yield low results because I know then that those results are actually important to me, that I actually want to trade them. So depending on that, you may have a very specific watch list. You could scan it through your favorite watch list. Here's my Jason Close watch. These are just tickers that I've got a keen eye on at any given time. This list is usually about 30 symbols. It's usually not that many names here. And I can just very quickly scan the list that I am watching at any point. You can choose whether or not you want to utilize extended hours. I tend not to. So this is preset, not with that turned off. And then your current candle toggle, for those of you that don't know, your current candle toggle makes it so that all of the conditions are starting from the actual current candle. And the idea behind this is that there are times when conditions will change. If you're looking, let's say, for a moving average cross on a daily time frame at 9:30 p.m., they might be crossed, and by 11:30 or at 9:30 a.m. they may be crossed, and by 11:30 a.m. they may not be crossed anymore. Something happened with the price, and they are no longer crossed. So at 9:30, when you ran that scan, it would find that name meeting that criteria. At 11:30, it would not find that name meeting that criteria. And some traders are okay with that. Some traders absolutely want the criteria to have been met. The only way that that can be possible is if the candle closed and those conditions were true. The way to define that that's the case, or the way to define that that's what you're wanting, is to turn the current candle toggle off. And essentially what that does is it pushes everything that you've defined for your candles back one candle. So it makes your 0 candle 1 candle ago. It would make this 6 candles ago. Technically, it would make this one 11 candles ago, and so on. So it pushes everything back, and it's looking at the most recently closed candle. So if these were daily time frame, we'd be looking at yesterday. Their 15-minute time frame is looking at the most recently closed 15-minute candle. Hopefully that makes sense. But that's the idea behind it. Generally, I'm going to have the current candle toggled on. I want to see conditions occurring right now as they are happening. I don't care if they are not true in 15 minutes. I want to see them now. We run this scan, and we get back no results. Well, that's because I was running it through a list of a very small amount of names. Let me go to the S&P 500 real quick. And I know that we're coming up on time. I know we got 7 minutes here before the announcement. And so we got to keep our eye on things. And so now we've got this list of symbols here on the S&P that are meeting this criteria right now. You can filter this list by alphabetically. Actually, it doesn't filter alphabetically. I always thought it did. No, yeah, it is. It is filtered alphabetically. Okay. Filter alphabetically, filter by last price from highest to lowest, lowest to highest, or filter by percentage change. Sometimes I like to use the percentage change. If I'm going to use a filter, it's usually going to be percentage change. And then click on a name and see what's going on with that name. And we can see it pretty easily. Let's make this smaller. And we can see kind of what's going on here, based on our conditions. They're meeting this criteria. So high of the current candle is higher than the high 5 candles ago. 5 candles ago higher than the high 10 candles ago. But at the same time, you've got RSI making higher highs, or lower highs rather, in between. So that's the general idea. I'm curious, does anybody have any questions about that? Do you find this to be helpful for you? If you have not yet, well, shoot. Let me do this. For anybody who has not yet or who has not yet downloaded this but is a TrendSpider user and wants to and hasn't seen that email, there you go. So just click on that link and you'll be good to go. We've got about 5 minutes before this data release. Do you guys have any specific names that you want to keep an eye on? Generally, I'll throw up a multi-symbol view. Need to remove a few items here, but generally I throw up multi-symbol view, and we watch a lot of symbols at once. If you have not joined me on one of these live streams before. So if there are any tickers that you guys are specifically interested in watching the market's reaction to, hit me with those tickers right now in chat and we will definitely get them up. I can show you guys, 16 tickers here. So y'all let me know which ones you want to watch. Generally, Apple's one that everybody wants to watch. Generally, VIX is one that everybody wants to watch. Ooh, let me turn this off. Generally, let's see, crude oil. And we got some folks watching energy. We'll throw up XLE. Gold, perhaps. Tesla, everyone likes Tesla. That is definitely true, Logan. Let's throw Tesla. Maybe the banks, XLF. What else you guys got? You guys are a quiet bunch today. Sometimes chat is just like popping. So you guys are just chilling. It must be early. Well, not so early for our friends in Norway and Sweden. And Doha. Boeing. Let's throw up Boeing. Microsoft, NVIDIA. NVIDIA has just been a monster, hasn't it? XLK. So I'm going to put Microsoft behind my head here. It might be kind of hard to see it, but we'll do like this. You can kind of see it back there. Meta. You guys are all about the tech right now. So how are we feeling about tech? Are you guys just riding the wave here? You guys feeling like tech is just going to continue being the front runner? Those divergences kind of were telling me a little bit different of a story. Roku, what's up, Robert Brush? Pleasure to see you here today, sir. All right, we are totally full here. If anybody has any other specific ones that they want to look at, maybe we can switch out something that I chose up at the top. But I want to make sure that we're covering everything you guys want to be able to watch. Oh, Robert Bird. There's a fella who comes in here. Robert Brush. Yes. Hey, Robert. I saw Robert Bird and I thought Robert Brush. Hello to both of you. Tech bullish until debt ceiling resolves, and then we'll see. Vicus. That's an interesting take. We haven't heard too much about the debt ceiling at least in a minute. I mean, it was all the talk there for a second. We're 1 minute away from these numbers here. Like I said, I'm not sure that the market's going to really react strongly here. Sometimes it does on a jobless claims number. Sometimes it doesn't. Yeah, you think so, Vicus? And in June, is that when they make the decision about whether or not they want to they want to raise the ceiling? Is that like their... Yeah, okay. Gotcha. I know that Powell is like very, very strongly for raising the debt ceiling, right? He's pretty much saying they have to do that. $6.30. Nothing's moving. Oh, it's because I don't have after hours turned on. Gosh, you guys, I'm an idiot. I apologize. Let me do that. I wonder if I can. Yeah. There we go. They have temporary measures and running on fumes. Yeah. So you're saying that in June they have to make some like long-term decisions? I haven't really looked too much into that story, honestly. I know that it was hot there for a second and then they weren't really talking about it. More of a soft Friday because it's the end of the month. Now, this is an interesting thought. It's a very interesting thought because I know that a lot of people are pointing to end of month, end of quarter. It's not just end of month though; it's end of quarter too. And so, like quarterly rebalancing is something that we need to be keeping an eye on. I don't know if anybody listened to it yesterday. Let me grab you guys a link. I was live on Twitter yesterday, and we had a space. And we were talking about what that kind of got touched on a little bit, that because we were coming into the end of the quarter here, that trading might slow down a little bit. Price might get kind of pinned a little bit until the start of next week. So coming into the end of the week here might be a little bit boring. Here's a link to that if you guys are interested in it. There's a good chat. We do these Twitter Spaces usually once a week. Just try and get a group of smart guys and girls in the room, and I try and ask as many questions as I can think to ask that are relevant to what's going on, and we pretty much always walk away with a little something, some kind of understanding that we didn't have prior. So it kind of seems to me like it's a bit of a nothing burger, this jobless claims number. Let me see what it came in at. Okay, so Q4 GDP, this revision actually revised down from 2.7% to 2.6%. Initial jobless claims are up 198 versus 195. Huh, so interesting. Just kind of reading through here. Yeah, so the jobless claims increasing. This is a bad news is good news scenario here. So not something that any of us want to see. We do not want to see jobless claims increasing. It's only by a small amount, but if you're a participant in the markets, we have a different agenda, and generally jobless claims increasing could be construed as good for the markets. So while we're watching here, and it, like I said, it's kind of feeling a bit like a nothing burger. Um, Prices aren't really doing a whole heck of a lot. Does anybody have any questions about that RSI divergence scanner? Do you feel like if you came into it not really understanding what the conditions were saying, did the explanation kind of help clarify it? Do you have any further questions about it? Yeah, right. Vicas, that's the whole thing, right? The one end result of the measures that the Fed is taking to bring down inflation is inevitably going to be job loss. And so that's why market participants generally see these things as more favorable for the markets, right? The faster we can get to cutting rates instead of raising rates, the better for the markets in theory. That's the story that we hear. Whether or not that's actually going to end up being the case, who knows? But that's the story that we hear. But getting back to my previous question, anybody have any questions about that scan? Are you guys curious about it all? Do you understand how that works? You feel good about it? Do you feel like you could go and create it on your own? That might be the mark, you know? Do you feel like you could create it on your own? Maybe some of you don't care to, but for those of you who do, who want to write out your own ideas, does getting a shared scan like that and kind of reading through each condition, does that kind of help you in formulating how you would write it out yourself? Because that's the whole idea here. I want you guys to walk away feeling like you learned something. That's my goal. That's my mark of did I succeed? Haven't played with it yet. That's all right. I mean, it's just one idea, right? Like you could be totally a successful trader and never ever touch RSI, right? You don't have to necessarily use it. So, as far as entry and exit, I wouldn't say that I would not say that you're wanting to be long based off just an RSI value. It really kind of depends on how you trade. The way that I use RSI divergence is as kind of a confirmation tool. I don't necessarily take a trade because of it, but I use it to confirm what I think might be happening. So, whenever I'm looking for opportunities to take a long, especially when price, like one requirement for me for taking a long opportunity is price kind of making a pretty dramatic move to the downside. And dramatic is relative to the time frame, it's relative to the ticker symbol, but just a dramatic move, it could be super extended to the downside below VWAP or something like that. Whenever I see price tumble in some sort of fast manner, what I'll start looking for is I'll start looking for divergence. I'll start looking for price continuing to make lower lows while RSI is making higher lows. And from there, I'll make a decision to take a long off of something more trend related, something more price related. So as you're making those lower lows, what you're doing is you're going to be making little peaks, right? You're going to be making little lower highs too. So you kind of are forming a bit of a potentially like a bit of a falling wedge type of thing. Once I see that RSI divergence and I see price make a new relative high relative to kind of the previous couple that came before it, then that tells me, okay, we might have a change of direction. Then I might look for a retest of a low. So it's multidimensional, right? The RSI alerts me that strength is kind of building up into those new lows, but then I still am going to wait for something more price action based to take an entry. I'm not going to take an entry off of where RSI is, or I'm not going to take an entry specifically because of where RSI is. I'm going to take an entry specifically because of what price does and where it comes back to and where it holds. Because ultimately, at some point, what you're going to do is you're going to make some lower lows. RSI is going to increase, and then all of a sudden, you're going to make a new high relative to something that came before it. Well, you make a new high, that's the first step of the change of trend, right? Or you could argue even that the divergence is the first step of the change of trend, but then you make that new high, and then you come back and you test and you put in a higher low instead of another lower low. And once you put in that higher low, whatever time frame it is that you need for that confirmation, that's where you're going. That's where I'm going to start really looking for long opportunities. And I would do the exact same thing on the upside. If price were making higher highs and I saw RSI divergence, so RSI making lower highs, I would then look for a lower low, right? Because generally if you're making higher highs, you're making higher lows too. I would look for some sort of lower low and then a retest and a failed new high. And I would be trying to take shorts kind of into that failed new high as close as I could get to it, because you have a risk off level. In both of those scenarios, you have a risk off level. Your risk off level would be the lowest low of that pattern, wherever you are, whether you're gaining, whether you're going higher, whether you're going lower, you would be trading off of that, either that lowest low or that highest high. And the closer you can get to getting into your position, as close to that highest high or as close to that lowest low as you can, it tightens up your risk, right? So it makes the trade a lot safer. If you make a new low, okay, we're still in trend, we're still going lower, we're making new lows. And if you make a new high, you're still in trend, you're still going higher, you're making new highs, right? So, and you would anticipate that to continue. But that's kind of how I use it. Yeah, see, Robert Brush. We do the same. We have the same idea. All right, so sun sign plays. It absolutely, you can use this idea on a very small time frame. You can use it on a very big time frame. I've seen it work across time frames. It's really about adjusting the parameters to your time frame, whatever makes sense for you, whatever time frame you like to trade. And again, like I explained at the beginning, I know you've asked me to re-explain or to show it again. So very, very briefly, we can talk about it. I'm not sure exactly how in depth I need to go with it, because also you can go back and watch the beginning of the video. As soon as I am no longer live, this video will live forever. You can pop to the front and you can go through the full explanation. But inside this scan, we have both bullish RSI divergence and bearish RSI divergence conditions, and it scans looking for both. So it's either bullish RSI divergence or bearish RSI divergence. In order to filter out which is which, you would just have to go through the tickers. I think for the most part, just based off of price action yesterday, for the most part, it's going to be all bearish RSI divergence, price making new highs into RSI making lower highs. But I'm not absolutely certain about that. You would have to just remove one of these condition groups to know for sure. But we wanted to offer both, and then you guys can build out whatever you want to build out off of this. You can make your own copy, then you can build out whatever you want. But essentially, it's either looking for RSI increasing over a period of candles and price making new lows, or RSI decreasing over a period while price is making new highs. That's kind of what we're after here. Can we use it as a checklist to alarm when it happens on my active chart? Absolutely. Yeah. So when you write a script in TrendSpider, you can use that script kind of across the platform. You can use that script in the scanner. You can use that script in the strategy tester. You can use that script as what we call a multi-factor alert. So wherever you're writing the script, you can save it as the thing that you're initially creating it to be. So in this case, I wrote this within the scanner. I saved it as a scanner. But the scanner just uses scripts to search for conditions. So if you wanted to, you could take both of these, right? You could take this whole thing And up here at the top, if you type in script actions and you say save as template, so we'll just call this RSI divergence by TrendSpider and bullish, bearish. And we say save. So now it's saved as a script on the platform. Over here on the left-hand side, this is our shared scripts list. So you'll see a bunch of things in here. You'll see any scripts that you've saved, and then you'll also see a bunch of pre-saved ones that we have written for you. So now that we've got it saved as a script, we can use it elsewhere. So let's say, for example, I want to be alerted on Apple anytime these conditions are true. So I'm going to go to the Apple chart. I'm going to go to where it says alerts and bots, this button right here, and I'm going to click the 3 dots, and I'm going to choose create a multi-factor alert. Now you notice the scripting area in the multi-factor alert looks the exact same as the scripting area in the strategy tester. It looks the exact same as the scripting area in the market scanner. It is the exact same. And you can load and do all the things that you would do in the scanner. You could do this all in the multi-factor alert too. So the same way that we went to that script actions button to save the script, we can actually go to that script actions button and load the script. So I'm going to say load from template. I'm going to search RSI divergence. Here's my RSI divergence by TrendSpider script. Click on it. It's going to load into the box here, and I'm going to say choose this script. And so now it says create a multi-factor alert on Apple, right? And here are all those conditions ready to go. I could say RSI divergence. We'll just call it, we'll just abbreviate it a little bit. Next, we need to choose how long we want the alert to live in the platform. You can, generally with a multi-factor alert like this, I'm going to max it out. I'm going to make it I'm going to have it living for as long as I can have it living. And different tiers of the platform offer different functionality. The highest tier offers the most amount of time. The lowest tier offers the least amount of time. But whether or not you have the highest or the lowest tier, it doesn't matter. You can still utilize these the same way. So we have, I'm just going to say 14 days. And then when it comes to triggers, I want this to trigger as often as it happens. So I'm going to choose multiple triggers here so that I get an alert every time these conditions are true, essentially over the next 14 days. If it happens 10 times, I'm going to get 10 alerts to let me know. It can happen up to 20 times, and I'll get 20 unique alerts for each time it happens over the next 14 days. So I say create alert, and now that alert is living on Apple for the next 14 days. It's just watching it. And once you've got that set up, then you can go to your alerts widget here. So I'm going to add this to the sidebar, and we can see at the top of my alerts widget, Apple RSI divergence. Now, with multi-factor alerts, what happens after that 14-day period once the alert expires? Or what happens if over the next 10 days, I get 20 alerts? Well, the alert is going to go inactive after either 14 days or 20 alerts, whichever one comes first. When it becomes inactive, it's going to appear at the bottom of your list of alerts. The difference between an active alert, or the way that you can tell the difference between an active alert and an inactive alert, is the green button here. So if there's a little green dot or a little green image, that means that that alert is active. If that image is gray, that means it's inactive. With multi-factor alerts, whenever they're inactive, if you hover over a multi-factor alert, you're going to see these 4 icons here. These 4 icons do 4 different things. You can edit the alert, you can copy the alert, you can get and see information about the alert, or you can trash it. You could just delete it. When a multi-factor alert becomes, oh, you need me to increase my volume. I can do that. How's this? Hopefully that's a little bit better. When a multi-factor alert becomes inactive, again, it drops to the bottom of the list. But when you hover over it, you'll still see these 4 yellow icons here, except one of them is going to turn into a refresh icon. I believe it's this pencil. Turns into a little refresh icon. Awesome. Cool, Edgar. And when it does, you can click that refresh icon. It's going to load it right back up. So once you create your multi-factor alert and it expires, all you have to do is refresh it using that refresh icon. I can also take this alert and clone it onto another symbol. So for example, let's say I want to put this alert that I just put on Apple. Let's say I want to put it on Netflix. I go to the Netflix chart. I go to this Apple RSI divergence alert, and this icon that looks like a little piece of paper with the corner folded down, this is the clone icon. So I'm going to click on that. And notice how I've now copied, essentially, I've copied the alert that was on Apple, but now I'm putting it on Netflix. Create multi-factor alert on Netflix. The only thing that I do whenever I do this is I remove this copy from the alert name, because it will... Sorry, y'all, my eye is so itchy this morning. It will continuously add a new copy. And if you go and you copy this alert on 10 symbols, by the end you have lots of copies there. So I always remove the little just the word copy from the alert name, and then create alert. And now that same exact alert is on Netflix. So if you had a list of symbols that you wanted to put this alert on, you would just pop through those symbols. Let's say Spotify. We go to Spot. We hover over the alert, we click the clone icon, we remove this little copy, and we say create alert. And so this is how you can quickly and easily put these multi-factor alerts on multiple names at one time. Super easy, super simple. The platform does all of the real work for you, right? You define the conditions you want it to alert on, and then it is your eyes and ears on all of those symbols. And the idea there really is about focus, right? If you are in the middle of a trade, you want to keep focused on a symbol. You don't want to be hunting around for other symbols that are meeting criteria that you're interested in, looking on the charts, using your measurement tools, using your indicators to like specifically find these things. You want the platform to do it for you, because then that's going to save you tons of time, right? And kind of tons of headache. So define your conditions, create the multi-factor alert, and you're off to the races. Pretty simple, pretty easy. Does all of that kind of make sense? Now, when you say checklist, Ahmed, we do have another feature that's actually really cool called the Smart Checklist. So let me show you this. So a Smart Checklist utilizes the scripts as well. And let me show you. So if we type in RSI divergence, we're going to select it and we're going to choose it. What it does is it loads this script into a smart checklist. And that smart checklist instantly tells us what conditions are true and what conditions are not true. Now, how do we read all of these boxes? It could be a little confusing. So let's work from the inside and out. On the inside, each individual piece of criteria, each individual condition has its own little box. So if that box is green, then those conditions are true right now. If that box is red, then those conditions are not true right now. Since we have two condition groups, you could see them as the conditions under all of the following tags. There is a second big red block here for each of the condition groups. So there's two big red blocks for each of the condition groups. If that block is red, what that means is that not all of the conditions contained within the group are true right now. So you immediately know that, yes, some of these conditions are true, but neither of the condition groups are absolutely true. Because neither of the condition groups are absolutely true, then any of the following is not true. And so you have this big red box here. And that's just letting you know, again, ultimately, that some of the conditions that you're looking for are true, but they're not all true. So this would be your, let's call it your checklist. So I don't know how many traders here are strat traders. But one way that this is kind of particularly useful for those of you who are strat traders, for those of you who are looking for time frame confirmation, multi-time frame confirmation, what we might look for is time frame continuity is what they call it. So full time frame continuity means that whatever time frames you're interested in. Generally, it's going to be a couple of bigger time frames and some smaller ones. It could be the daily, could be the hourly, could be the 15-minute, could be the weekly, right? Like if you have time frame confirmation, what you're saying is that all of those time frames that you're interested are all pointing in the same direction. They're all green. The 15-minute candle's green, the hourly candle's green, the daily candle's green, the weekly candle's green, the monthly candle's green. When you have that continuity, that gives increased odds to price continuing in that direction. Whenever you lack that continuity, then there's kind of some what's the word? I don't know what the word is, but there's just some there's some discrepancy there. You know, maybe the daily's red, but the hourly's green, the 15 minutes green. Maybe the small time frames are starting to turn green, but the daily hasn't turned green yet, or the weekly hasn't turned green yet. So you wait for that full time frame continuity to just give you some more confidence in the trade direction that you're taking. So this is a really great way. Actually, we'll use this one. We'll use this one. This one is the big daddy. So this one's looking for 1 minute, 5 minute, 15, 30, 65, 90, daily, weekly, monthly, quarterly, yearly. It's looking for all of those things being green. And it's just a very, very quick and easy read to go, okay, the 65-minute is green, the daily, the weekly, the monthly is green. The fact that daily, weekly, monthly is green, that tells me what I need to know. I'm willing to go long in this particular instance, right? That would be the approach. Before this existed, you either had to have a time frame continuity indicator or tool, or you had to have multiple charts up on your screen, right? And maybe on your multiple charts, you have multiple different time frames. And using those multiple different time frames, you can zoom in, look at the current candle, 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 and you can know what's going on there on the time frames. This is just a way to make that easier. So think about it in terms of all of the unique conditions that you might require. We're going back to the beginning of the show here where I was talking about minimums. I always like to say, define your minimums. Define the minimum things that have to be true in order for you to be even interested in trading a stock. It could be, you know, your dailies above the 200-day moving average. It could be today's current price is higher than yesterday's high. It could be today's current price is lower than yesterday's low. It could be all kinds of RSIs above 50, prices greater than 1% above the VWAP. You can go wild with your ideas, whatever you require. If you have bare minimums that need to be true, in order to save yourself a lot of time, because those bare minimums could be unique indicator settings or whatever, in order to save yourself a ton of time and not having to hunt for it on the chart, define those things in a script, throw that script into the smart checklist here, and just let this live on the side of your screen. As you pop through different names, it's going to check all those names. You see Netflix. Netflix is green almost on every single time frame. The only time frame it's not green on right now is the 5-minute, the monthly, and the yearly. It's kind of impressive. You can go through all these symbols and see very quickly what is meeting the criteria that you might be interested in right now. And that's really what it's all about. It's all about saving you time. Disney, green on everything except for the monthly, quarterly, yearly. So yeah, that's how I would kind of use it. You can absolutely use the multi-factor alerts to have the platform let you know that those conditions are true when they're true, or you can use the smart checklist and you can use them in tandem as you're popping through names to kind of give you a little bit more insight so you don't have to zoom in so close and have a bunch of indicators on your screen. You know, imagine if you had 10 indicator conditions here. You said price above the 200, the 100 above the 200, the 50 above, the 20 above the 50, the RSI greater than 50. You know, the more conditions you add to your requirements, the more manual work you would generally have to do to see visually if those things are true. Smart Checklist allows you not to have to do any of that manual work. You just define it and let it be your eyes and ears. So hopefully that makes sense, and hopefully that answers the question that you were looking for. Do I think the options widget will eventually show spot price, contract price, and or IV? That's a good question. I really don't know. It's not that I don't want to give you an answer. I just don't know. That's a little like outside of my purview. When it comes, it'll come. I'm not super privy to when those things might come though. And I'm sorry that I can't give you more information on that. I do wish that I could. But one thing you could do is you could always, well, I could ask for you, and I'll do that when we get off of this. I'll see if there's any additional data that is planned to be coming down the wire. But you can always reach out to us on Twitter in our DMs. You can always ask there. You can also always make requests. Like if you go to this little icon here in the top right corner, and go to request a feature, you can always do that. You could ask for that sort of stuff. Again, I can't say when or if it might come to the platform, but you can always ask for it. It's definitely tricky, Jeff. There is not an immediate way on the platform to tell if these are buys or sells. Yeah, there is some tagging. So on data flow, I don't know if you've played around with data flow at all, but data flow is going to be just a steady stream of the most up-to-date unusual options. So this thing moves pretty fast. So do keep that in mind. If you find something there, sometimes it's best once you find it to like click on the symbol and then have the unusual options widget up so that you can see the thing that you were looking for. But on the right-hand side, oops, because I actually wasn't sure about this the other day. Man, it's so hard to get in there. There it is. The other day, I was live, and a viewer asked me what these what the bullish, bearish tags were. And this data comes from Benzinga. And what we found was that it's based off of where the purchase price was relative to the ask. The closer the price was to the ask, or the closer the price paid was to the ask, it's going to get a bullish tag. If the ask was paid, or if it was close to the ask, and if it's closer to the bid, then you're going to get a more bearish tag. So this doesn't necessarily suggest that, because sometimes you'll see, like in this one, you've got puts, but it's a bullish trade for those puts. So it doesn't necessarily mean that they were sold, meaning like they think price is going to go up, so they sold a bunch of puts. It just means that the trader who bought these puts did so pretty close to the ask, and that's why it was bullish leaning. Bullish for the puts, so expecting price to go down. That's what that tagging is there. The blue shaded box, you're talking about this right here? Larger than usual volume. Yeah, of course, man. No problem at all. Is this what you're referring to? Because it kind of, the only reason I asked, because it kind of looks purple on my end. Yeah, so this is, I believe it's size relative to open interest. So, for example, you have an open interest here of 9,404 contracts, and the size on this was 495. So a very small portion of the open interest that this trade took up. Whereas these ones where the open interest was 113 and the size was 1620, obviously that's way more than the open interest, so that box is just bigger. Yeah, so it's just size relative to open interest, but there is a limitation on it. So you've got an open interest of 97 and a size here of 12,000, way more than the open interest, but it's hard to show that, like this bar should be way over here relative to the open interest, but the limitations of the panel are what they are. But yeah, that's what that's all about. Well, guys, we are at an hour here, and there are a bunch of y'all here. I do really appreciate you guys hanging out with me. I hope that this was helpful for you guys. I hope that we all are walking away this morning feeling like we learned something. I'm curious to know if anybody has any last minute questions before I get out of here. I'm actually moving today, so I have got to get my dogs walked and welcome the movers here. Man, options are tricky, Robert. I'm going to tell you right now, options are tricky. I would say if you're trying to learn about them, the very best thing that you could do is study all of the Greeks. Study gamma, study theta, study how decay works, because that's going to have the biggest impact on the price of your options at any given time. And admittedly, I am not an expert in that regard. I generally stay away from options. I'm more of a futures guy, because futures have the same kind of leverage but no decay. So I like futures for that reason. The decay is what'll get you. So you got to be really, really mindful of how you, of when you're getting into your options trades. They are wildly tricky. And then you have to think about all of the expiries and stuff. You got quarterly expiry coming. You got to think about all that stuff. I will say this is true too. 88. Yes. Tons of ETFs that act like options. Again, if you're wanting to trade options for the leverage piece, I would be personally, and you're wanting to avoid having to deal with decay, I would be looking at anything that's levered 2x, 3x. Like 88 said, tons of ETFs out there that have that leverage that you might be looking to capture through those options. But one great resource for options is Spot Gamma. He's a good friend, Brent Kachuba from Spot Gamma. He's a brilliant guy. And Spot Gamma is a really great product specifically for options flow, for understanding options flow, especially real time. They've got a ton of cool tools. Another great follow for options is my friend Imran Lakha. He's at Options Insight on Twitter. He's got a great mind for options. I would recommend him as a follow. Trying to think of who else or another place where you can maybe learn about them. If I think of any others, I'll definitely. Options Sean on Twitter. That's Sean McLaughlin. He is the chief options strategist at All Star Charts. Our friend JC Peretz and Steve Straza, these guys. Options Sean. He's their options guy. He does a ton of strangle plays. He has a really, really thorough understanding of options and options positioning, and very rarely is he like a directional options trader. More often than not, he's doing spreads, or he's buying one, selling another further out, or whatever it is. But he's a great follow too. So Options Sean, Spot Gamma, Options Insight. Those are three great follows on Twitter for options content. How is Alpha Trends working on this platform? That is an interesting question that I'm not sure how to answer. Can you maybe give me maybe just a smidge more information on what you're looking for? Are you looking for anchored VWAPs on the platform? Is that what you're after? Because when I hear Alpha Trends, I think anchored VWAPs. Thank you, MM. I appreciate that. That's very nice of you to say. Thank you, B Cart, as well. Thank you. That's very kind. I do appreciate it. We have hired movers today. I'm of the age where I can no longer be carrying hundreds of pounds up and down steps. Just not willing to do it these days. So we got a team of guys. How to create your own anchored VWAPs. Let's talk through that real quick. Super, super easy. Right click on the candle that you want to anchor from and choose Create Alpha Trends Anchor VWAP. Easy peasy lemon squeezy, sir. Right click and choose where you want to create your anchored VWAPs from. Any candle. That is the fastest, most efficient way to manually create your own anchored VWAPs. There is, however, a anchored VWAP indicator. We've talked about this in other shows, but we could talk about it very briefly here. If you go up to your indicators tab, click on the 3 dots, and grab one of these Alpha Trends anchored VWAPs. The difference between manually creating, so right-clicking on a candle, you could trade like straddle by the inverse ratio of the common. Yeah, for sure. Instead of right-clicking on a candle and putting it exactly where you want it, let's say you want to have the same anchored VWAP on every chart, meaning you want an anchored VWAP that's drawn from a highest high. This is how you would do that. So you can automatically anchor a VWAP to the highest volume candle, the highest high candle, the lowest low candle, a blue raindrop, a recent gap, the day to date, the week to date, the month to date, the quarter to date, the year to date. So let's say you wanted a year to date anchored VWAP on every chart that you look at, just like maybe your 200 SMA or your volume profile or your RSI or what have you. You would just select that option, say apply. And we have a year-to-date anchored VWAP here. So this one is in continuous mode. You notice how it jumps, right? It jumps. So at the start of every year, it's going to re-anchor to the start of that year. So here's your January 3rd anchored VWAP. Here's your January 3rd, 2022 anchored VWAP, right? And so on. So this might actually be a level of interest here in the coming sessions, this 410 level where last year's anchored VWAP closed. I'm going to be keeping my eye on that. That might be an interesting spot. So this is how you can utilize anchored VWAPs throughout the platform. When you manually anchor a VWAP, you're doing that on a unique chart at a unique spot. Right? That's not carrying over. When I anchor to the October 5th, 2021 candle on SPY, I'm not going to jump to the Qs and see that same exact anchor VWAP on that same exact date. You have to utilize, if you want an anchored VWAP to be on every chart that you're looking at, you have to do it through the indicators here, and you have to select one of those automated anchored tools. That's the way. And if, let's say you want to back test it, let's say you want to just back test an anchored VWAP condition, maybe price above a weekly anchored VWAP or price below a monthly anchored VWAP or whatever it is, this is how you would do it. You would utilize these auto anchored VWAPs in continuous mode. And the continuous mode piece is just saying that every single time a new condition that you've defined as met, meaning a new year in this case, a new year starts, it creates a new anchored VWAP. You can turn that off though too. You don't have to have that continuous mode on. It's right here. So you can turn that off and then it's just going to anchor to the current year. But if you are using the strategy tester, you want to test how price reacts to whatever, a certain anchored VWAP condition, you need it to be in continuous mode for the strategy tester to be able to look back and see historically what it did when that condition was true. What's up, everyone from Boston, deepdive.live. What's up, deepdive.live? Hope you're well. You've been using volume by price? Nice. There you go. Yeah. We are big fans of volume by price. Thank you, Robert. Yeah, I appreciate that. I'm sure the move will go well. All right, guys. Well, I'm going to jump up out of here. Again, I want to give a big thank you to you all for being here. I do very, very much appreciate it. Actually, let me give you guys something real quick while we're here. For anybody who is not yet a TrendSpider user, if you're thinking about becoming one, I'm going to give you guys a 35% off discount link. There it is. If you're not yet a TrendSpider user, but you're thinking about becoming one, this is a link to a 35% discount. You would just sign up using this link. Free 7-day trials. You got nothing to lose, giving it a go. So if you've been sitting on the sidelines, you've been hearing about TrendSpider, you're tuned in today to kind of see what it's all about. Your interest has been piqued, give that a go. You got 7 days to try it. I will be live again on Tuesday and Thursday of next week doing this exact same thing, answering any questions that you guys might have. Jeff Vance, stochastic RSI versus regular RSI. Are you asking which I prefer? If you're asking which I prefer, Me personally, I like regular RSI. I do understand why some people like to use stochastic RSI, but I think it's just a matter of preference. It's just a matter of what you're used to looking at. I always kind of revert back to the idea that every indicator works sometimes. And so, if you're used to using one thing, you gain an understanding of how that thing works, and you take trades off of what it tells you at any given time. I don't have a personal preference with stochastic RSI. I myself prefer just standard RSI. Now, that being said, it would be interesting, and we could do it in another show. It would be interesting to go in and maybe do a little strategy testing with stochastic RSI. Maybe we could find some alpha in there that we didn't find with standard RSI. Maybe there's something we could be asking ourselves about, when RSI is oversold and stochastic RSI is oversold, or maybe you got an RSI oversold reading and stochastic is flipping, going positive. You're getting that cross. These are things that can be very easily tested to see how they work. And so maybe what you would want to try, Jeff, in your free time, and again, like I said, we can maybe do this in another show. Maybe what you would want to try is playing around with a strategy tester and defining those conditions and seeing if that stochastic RSI reading gives any additional strength to your previous idea. Can you add a stochastic RSI condition to something you're already doing and make it a little bit more powerful, or maybe make it a little bit more efficient? I don't know. Are there videos on how to utilize the strategy tester? Yes. Yeah, so you would want to go to our YouTube channel and then just search strategy tester. There is actually a really cool video. Let me go grab it real quick. And I say really cool. I mean, maybe I'm a little partial because I'm the host, but let me show you, let me link you to something. Because we recently did a video where, here we go. Oh, I look like such a nerd in this. We recently did a video where, hey, Lori, how's it going? Good morning. Hope you're well. We recently did this video. And this was kind of like it's a very basic breakdown of the strategy tester. But what's kind of fun about it is we asked viewers to help us move the ideas along. So we started with a very basic idea. We would add a condition to the buy side. We would add a condition to the sell side in order to get the strategy to be more efficient and to work better, yield better results, be more powerful, be more consistent over a longer period of time. I think this is a great entryway into learning about the strategy tester. And we'll probably end up doing kind of more of these live streams in the future where we allow you guys to help us push these ideas along. And maybe we can even do one of these mornings. We can talk through ideas and how to make strategy tests better. But this is a great intro to that. And I would recommend, if you have an hour this weekend, spend a little time with this video, because hopefully the idea was to help you think through, or help users think through very simple ways to make their strategies better and more efficient. And also to help understand, there's a lot of tools going on with the strategy testers. So to help understand, just a little bit more about it and what all those tools are. I will also say, Jeff, let me check my schedule this weekend, because I'm almost certain we're actually doing a presentation on this, I believe, on Sunday. Well, I'm not doing it, but our head developer, Ruslan, and Dan are doing a presentation on Sunday. Now, this is only for TrendSpider users. So if you're not a TrendSpider user, you will not be able to tune in. But if you are a TrendSpider user, you can tune in. Let me make sure. I'm almost certain it's Sunday evening, but let me get a time for you. Yeah, I'm almost certain it's like 6 p.m. on Sunday evening. If you're a TrendSpider user, you will get an email about this, but I'm almost certain that Dan and Russ are doing a webinar this weekend to talk through kind of all of the fine details of the strategy tester. So I'm even going to tune in just to brush up my skills and make sure that I understand everything correctly. There's a lot on this platform, and that's just the bare bones of it. There's a lot on the platform, and it's easy to kind of forget stuff. So yeah, I would strongly recommend tune into that. What's up, IJ Rambo? Hope you're doing good today, man. Haven't seen you in a minute, but I hope you're well. And unfortunately, I'm about to get up out of here. Did anybody before I go, anybody have any very last minute questions? Because I do have to step away from my computer here very shortly, but I want to make sure that if anybody has any last minute questions that I get them answered. Ooh, also guys, please do me a favor. Like and subscribe to this channel. The more subscriptions we get, or the more subscribers we get to this channel, the more likes we get on this channel, the more I can go to my team and say, this is working. They want more. They want me to be live more. We need to do more of these things. So if you guys enjoy coming here and hanging out and getting some questions answered in the morning pre-market, please give us a like and subscribe. Let us know that we're doing the right thing here. Let us know that you're enjoying it. I also asked in communities, I don't know how many of you guys have access to YouTube communities, but I also threw up a poll in communities this morning to find out, when might be the best time for me to do these. Sounds like some of you guys are really into this pre-market thing. What if we did it midday? What if we did it around lunchtime? What if we did it power hour, the last hour of the day? What if we did it at 4 in the evening? What if we did it at 8 in the evening? What times would work good for you guys? I am very open to, I'm very open to doing more of these shows, but I'm also open to doing at different times. And I don't want to leave anybody out by always doing them pretty early in the morning. I know some folks have day jobs and cannot attend. So any feedback you guys can give us on what times might be best for you, what days might be best for you, would a weekend be better? I'm all ears. I'm open to whatever y'all got. So any last minute questions? I'm about to get out of here. Last minute questions. Did everybody give me a like? Did everybody subscribe to the channel? I hope that you did. It would mean a ton to me. It would be very helpful, and I would be forever thankful. Going once. Going twice. Noti, is that not I? No questions from IJ Rambo. Any questions from anybody else? We're going to get out of here. Last call for questions. I got to move. Are these tickers? Rambo, are these tickers? Is that what you're saying? You want to look at tickers? I'm sorry, man. My time has come to an end. I would love to look at these tickers with you, but I've got to run. All right, 88. You've told me everything I need to know. Guys, again, thank you so much for being here. I do really appreciate it. We really appreciate it. Take advantage of that 35% off discount if you are not yet a TrendSpider user. I will be live again Tuesday morning at 9 p.m. Eastern time doing this exact same thing. So if you enjoy this, come hang out with me again on Tuesday. We'll be here. Have a great day, rest of you guys. I hope that you trade them well out there. Again, remember, we're end of the quarter. We're coming into the end of the quarter. There can be some tricks. Be careful, be mindful, be prepared. We'll see you guys on Tuesday. Have a great weekend. Love y'all. Adios. Bye-bye. Oh, I got to press my thing here. Hold on. Here we go. Okay, bye.